Hello, and welcome to the Investing from the 920 podcast starring Josh Hansen. Today we are going to be covering the top news for three industries, and of those industries, we are going to be covering the airline, cruise line, and boat makers. So, starting with the airline industry, from the start of the pandemic, the airline industry has taken an absolute beating since March. And March was the lows of the stock market. And that is also when the pandemic was just first out starting and the government had shut down the entire economy. But it hurt the airline industry especially because it closed off almost all travel across countries, states, you name it. So in March, airlines saw passenger traffic down 51% and in April down 96% year over year. So that just absolutely killed their revenue for the airline industry. So for the first time in 5 years, Delta and United Airlines and the other big names were reporting quarterly losses. And speaking specifically for Delta Airlines, which was voted by you guys as their favorite airline to use to travel, their revenue was down 90% or $538 million, and it will take years for that business to recover their losses. United Airlines also reported on March 31st a $2.1 billion loss for that quarter. And finally, American Airlines reported a 90% decline in revenue year over year, just the same as Delta. So the outlook for the industry is also grim too. Now, the outlook has really been what has been the saving grace for the stock market. People have been hopeful since the economy was shut down on hopes of the economy opening up and recovering fully. But from a recent survey from the IATA in February, half of flyers said they would wait a month or two after finding a vaccine for COVID-19 or at least having the virus under control. Another 28% said they would wait 6 months, and 11% said they would not fly at all. Now, this is keeping many airline stocks down because they don't even have the hope for the recovery in flying because people are not wanting to fly during the pandemic. And from the losses that have occurred due to the pandemic, there have been many business or airlines and businesses, but specifically what I'm talking about is airlines. They have filed for Chapter 11 bankruptcy. Now, if you would like to learn more about the different types of bankruptcies, visit episode 5. So, just to list off the American airlines that have filed for Chapter 11, that would include Trans-States Airlines, Compass Airlines, Miami Air International, Raven Air, Nantucket Express, and Shoreline Aviation. Luckily for these companies and their investors, there has been some government intervention in giving out grants for these companies and the bigger airlines to stay alive. Moving on to the cruise line industry, and just to foreshadow, it's going to be just as bloody or even more bloody for the cruise lines than it was for airlines. So to start with Norwegian Cruises, the cruise line industry giant saw its revenue drop a staggering 99% from the same time last year. The company lost $715.2 million that quarter, and its earnings per share was negative $2.99 compared to last year when they made a positive $240.2 million or $1.11 per share. Now, according to MicroAccess, which is a popular website used to calculate the probability of stocks going bankrupt, Norwegian Cruises has a 43% chance for filing for bankruptcy. Now, that might seem a little high or a little low to others, but anywhere around that 50% margin is something I would not want to be investing in at all. No matter if the outlook for the future looks bright, if it has about a 50% chance or above, there's not really a large chance that I'm going to be investing in that company. Moving on to the next cruise line industry giant, Carnival Cruises, they reported a loss of $4.4 billion or negative $6.07 per share for that quarter. And now this is not adjusted, so that includes all the charges that the company has made, not their raw numbers. But the company revenue streams were down fivefold from where they were last year at the same time as this year. Last year, for the same exact quarter, Carnival brought in $4.8 billion. And this year, the quarter only brought in $700 million, which is a ginormous drop and is killing the company. Moving on from the bloodiness of the airline and cruise line industry, boat makers and the boat market have been on fire lately. With the mass exodus into suburban areas and cabin purchases on the rise, boat sales are also on the rise. People are looking to get away, but with the pandemic, they're not able to travel very far, and so if they have a lake or a river that they can tool around on a boat, that's just enough vacation for them. So to start with the first company, Mastercraft has seen a sudden rally because of this. After dropping almost 100% from its high in February at $19.80 per share down to a low of $4.90 per share, it has since recovered all of the drop and then has also made some for the year. It is now sitting at a price of $22.54 per share as of August 18th. What Mastercraft has going for them is that they mostly make speed, ski, and wake boats. Wake boats, for those who are asking themselves what that is a boat that produces a large wake for someone to surf on, and that sport is called wake surfing. Now, this has been a recent trend that has taken over the boat market, seeing how more and more people find the fun in wake surfing rather than just wakeboarding or skiing, water skiing. So the stock market tends to favor those who hop on the trends early. So with this trend still being on the rise, this could be a real winner in the future. Moving on to the other large boat maker in the market, and that is Brunswick. The stock had recovered all of its losses and had a slight gain for the last week of July. But since then, it has been down about 12%, and this leaves the stock about only a 2% loss from its high pre-pandemic. Now, this stock has not seen as much of an increase in price because they focus more on luxury boats or pleasure boats, as the company calls them. So this leaves a hole in their market share that Mastercraft has taken upon themselves to fill. The hole that Brunswick left in their market share is the wake boats, because they focus more on the mini yachts or the nice cruising boats. That concludes this episode of the Investing from the 920 podcast starring Josh Jansen. Make sure you like and subscribe for more videos like this. I'll see you guys next time.